Hey guys, what's up? In this video, I want to cover two high growth stocks that I think are great buys right now. I'm invested in both of these companies and combined, I have about $30,000 invested in them. So I'm very bullish on both of these companies. And by the end of this video, I think you're going to understand exactly why. Okay, so before we get into this video, if I could ask you guys to drop a like on it. It really helps out the channel and lets me know if you guys are enjoying it or not. And feel free to subscribe if you get any value out of this content. I upload stock videos every week. And yeah, this video isn't going to be your typical growth stocks. You guys are probably getting a little bit sick of hearing about all the EV growth stocks that are coming to market. So I think you guys are going to get a lot of value out of these two companies that I'm going to mention in this video. So the first company I want to talk about is Planet Fitness. Now I have about $27,000 invested in Planet Fitness. So this is by far a bigger position than the other company I'm going to talk about after this. In fact, Planet Fitness is actually my biggest position in my portfolio right now. So let me explain exactly why that is. Okay, so if you don't know what Planet Fitness is, they're a fitness chain. So they have gyms all across the United States, they're in Canada, they're in the UK, they're in Australia, so they're international, but primarily in the States. As of right now, they have over 2,000 locations, and they plan on expanding up to 4,000 locations over the next coming years. So they have lots of room to growth, and they're currently trading at a little bit of a discount. So before the health crisis, they were trading at $87 a share. They dipped massively, and since then they've recovered to $62 a share, which in my opinion is still a great buy. You're still getting it at about 25% off from their all-time highs. Now you might be thinking, well, isn't Planet Fitness going to be severely affected by this health crisis, and are they going to be able to recover? Well, actually, in my opinion, I think Planet Fitness is going to be well better off than they were before the health crisis. Now I have a few reasons why I believe this. So lots of gyms have closed down because of the health crisis, including gyms like 24 Hour Fitness and Gold's Gym, and lots of local gyms are going out of business as well. Now, Planet Fitness isn't at risk of bankruptcy. They have tons of cash on their balance sheet. So I believe because these gyms are closing down and going out of business, this is going to drive more memberships to Planet Fitness locations. Planet Fitness charges around $10 for a membership. So over the last years, many people, even people that I know and myself, have transitioned to gyms like Planet Fitness that's only $10 compared to a $50 membership fee. In my opinion, this is really the way of the future, especially being we're in an economic crisis where people don't have as much cash as they normally would. So when they're looking for a new gym, they're more likely to opt for that $10 membership fee at Planet Fitness. And also for existing memberships at Planet Fitness, a lot of people don't notice that $10 coming out of their account every month, and they're more likely to cut costs in other areas of their life. Like they could easily cut down $10 off their food bill and keep that monthly membership. So for those reasons and at the current discount, I think Planet Fitness is a strong buy. But let's look at what analysts are saying. So analysts are generally looking between $65 to the $80 range currently. I think this is going to really pick up over the next 6 months, especially when January rolls around, everybody's New Year's resolutions. There's going to be less gyms to choose from, and I think Planet Fitness is going to capitalize huge on that. Also looking at estimated revenue, next year they're anticipating between 640 to 780 million, where in 2019 they generated 688 million. So if Planet Fitness manages to generate $700 million in revenue next year, that's above where they were pre-COVID. So it's likely to see the stock trade above the $87 range they were trading at. But really, I'm expecting Planet Fitness to well outperform these analyst expectations. And I think it wouldn't be unlikely to see Planet Fitness trading at $100 in a year from now. Okay, so the second stock on my list is InMode. Now I have about $3,000 invested in them, so a small position for me. But what InMode is, they're essentially disrupting the plastic surgery market. So they focus on non-invasive surgeries where plastic surgery is very invasive. Now, if you know what ARK Invest also has InMode in their Israel Index ETF. They have about $880,000 worth of shares in that. But I invested in InMode before I even knew ARK was also invested in them. As you're probably noticing, I like companies that are disrupting an industry. So let me quickly cover exactly what InMode is. InMode connects physicians to the latest technologies that can optimize results for their patients and your business. Our non-invasive and minimally invasive technologies provide solutions for contouring, skin treatment, acne, hair removal, anti-aging, women health and wellness, pigment and vascular issues. So the way InMode makes money, they have different machines that they sell to doctors. So the doctors buy these expensive, like $10,000 plus machines to use. InMode also generates a little bit of recurring revenue after each surgery. It's around $200 for different ointments and lotions to ensure they have a good post-surgery recovery process. I don't exactly know what is given to them post-surgery, but I do know it's around $200 that they get. Now, InMode is still in the early days of growth, so they have a ton of growth ahead of them. They're in the United States, they've recently expanded into Canada, they're currently expanding into China, which is a huge market for different non-invasive and invasive surgeries. So I'm expecting that to really boost their revenue growth in the near future. And then also you'd think InMode would be doing very poorly during this health crisis, but actually they've been performing quite well. On September 2nd, they announced a share repurchase program up to 1 million shares. Now this is generally only done when a company has extra cash and they want to reward their investors. This is a really good sign considering all surgeries were basically at a standstill for months because of the health crisis, and this did affect InMode's business, but they still managed to perform well, which is a really good sign. So InMode is currently trading at $37, where before COVID they were trading at $48. So you're still getting them at a discount, and there's lots of room to run here. Also, do note they have a P ratio of 32, which is extremely impressive for a high growth company that's only IPO'd about a year ago. And that's because they have probably the best balance sheet you're ever gonna see. Let me show you this. So on their balance sheet, they have $203 million in cash and only $660,000 in debt. They essentially have no debt compared to how much money they have. And they are cash flow positive, you can see down here. They have high insider ownership of 43%. Institutions own about 26%, so lots of room to grow there. If that number increases, this stock could easily be pushed higher. And look here, the stock has a float of only 16 million. So if some big institutions decided to invest in this, the stock would go flying up. But obviously, on the flip side, it's easy for the stock to go crashing down as well. But as long as they perform well, we can see very strong movements in the upside. Now let's take a look what analysts are saying for expected revenue. In 2021, they're expecting between 203 to 214 million for the year, where in 2019, they generated 156 million. So they're expecting to see much higher revenue than before COVID, and we're still currently trading way below COVID levels at $37. So I see this being a pretty good risk versus reward situation. And in my opinion, it's a great buy at $37. I bought in around $28. And I should mention as well with Planet Fitness, I bought in at $56. So those are my two high growth stocks for this video. Comment down below what you think about them and if you plan on investing them or not. And if you found this video informative, please drop a like on it. It really helps out the channel. And feel free to subscribe if you like seeing this kind of content. And I'll see you guys in the next video.